Aloha! Stock market today. Analysis for February 21st, 2023. The market was closed yesterday, so today we are back. Before we dive into looking at the economic calendar, looking at what happened in the stock market today, I want to invite you to take a look in the description of the below this video for the link to ihavesuccess.com, and then check out the website. See if you like it. It's basically really geared towards selling cash secured put options on stocks that you don't mind owning. Variety of benefits. I don't want to spend a whole lot of time talking about it, but I will spend a little more time to let you know at the 1 minute mark, it's coming up, there's going to be a video link popping up right here that will give you 5 reasons why you should be selling cash secured put options on stocks you don't mind owning. Boom, it popped up already. I put it at the 1 minute mark so it's easy to remember. So check out the website. It's going to be changing. So keep checking it out, and if there's anything that pops up for free or for paid that you want to do, go for it. And if you want to just introduce yourself and become internet pals with your good buddy Brent, then leave a comment. All right, let's get into the markets. Today, Tuesday, February 21st, we had this Purchasing Managers Index report come out. And Forex Factory basically says it's a leading indicator of economic health. The businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. I went to FinViz and I quickly looked through some headlines of the news, and I didn't really see any headlines that were giving their opinion of why the stock market took a tank today. Maybe I didn't scroll down enough, but I just kind of went through it really quickly, just looking to see if there was going to be anything. I'm not so much of a news guy, just because I don't know who writes this stuff, and not only do I not know who writes it, but I don't know who pays them. And to me, whoever pays your bill is probably the person that you're more than likely want to stay in their good graces. So so basically that's enough on that. Like, if you want to pay attention to news and things like that, then something you can consider is figuring out how this person that's writing or reporting to you gets paid. Do they get paid on results, or do they get paid based on something else? And then you decide from there what you want to believe. We're looking at a line chart of the S&P 500, and I zoomed it in, starting going back here as timers. Can't see exactly where that is starting. Whatever this year is. Anyways, here is 2021 ending, 2022 beginning. We were in that down market for a while. And are we still in a down market? It kind of seems like a sideways one, right? And seems like about right here, we rallied all the way up to here, dropped back down to here, rallied not as far up, but to here, not as far as up to there, but to that point, almost to that point. And then we pulled back here, rallied up to here, then pulled back, but not as far as down to here, kind of around this point, and then rallied up, but not as far as to here, just kind of a little bit past here, and then turned around right at the moment. So last week I kept talking about watching to see what's going to happen from the 420 to the 440-ish area. So today, what did we see happen in relationship to the 420 area? It went the flippin' opposite direction is what happened regarding the 420 area. And you might recall I was also talking about between the 420 and the 400 area. So what did we see happen? Well, it's touching this 400. Let's switch this over to a line chart. Actually, it's on a line chart. We'll do this instead. we will, boom, we'll go over here. Let's change this one to SPY. Now, right here, I have a slow stochastic setup with these parameters. And you know what this is doing really, really well? This is very accurately predicting what happened in the past. Excuse me, not predicting. It's very accurately showing what happened in the past. Isn't that phenomenal? Showing what happened in the past, like it's a history book. Oh, so do with that with what you will. I'm just leaving it there for whatever reason. Let's bring this time to, let's go to 2 years. Let's see what that looks like. All right, at 2 years, kind of went on the daily chart. Maybe let's drop this down to 1 year, just for the moment. Getting a little closer. So S&P 500, and we're talking about what's going to happen between. Is it going to go up to, what's going to happen between the 420 to 440 area, right? And what we're seeing happen today is it's going the opposite way of the 420 area. Closed around, what was it, 407, 407-ish, 408 of last week. Take a look right here. See that C? Do you see with your eyes that C for close? When I hover over this candle, which is Friday's candle, take a look at that. Okay, 407, close at 407 and 26 cents. And now today it dropped down, and let's take a close look in here. At the moment, it's kind of gapped down, right, compared to where it closed here last week. Kind of compared to that close, gapped down to open here, rallied up a little bit to touch where this 404 area, right there where it had touched before. Now it's on the opposite side touching it, and sold off all the way down here. Now, price action stayed almost to the very bottom, but there's this little bit of wick on the end of there. Look over here at this L for low. Look over at that L. So 398 and 82 cents was the lowest. So it dropped quite a bit, ending at about 407, dropping all the way down to a little bit above 399. Or do you want to say a little bit below 400? You can word it whichever way you want. So let's continue to see what happens. But this is, well, if you were wanting to see bullish action, this is not making you happy, right? You're not seeing bullish action. However, it's still the bull might not be done. Now, I'm basically hedging my bets here when I say that. I really don't. I don't have a strong conviction of which direction I think the market is going to be moving at the moment. Switch back to this line chart. It's a bit easier to. Oops, see, that is not what I wanted to do. Let's just do this. Well, in case I'm going to do that. All right, here we go. So I do have an opinion on direction. I think direction is sideways right now. Right, the market can go 3 directions: up, down, and sideways. Right now, I'm thinking sideways, and so it could drop all the way down to 380, and it would still be in a sideways market. Technically, it could drop all the way down to 360, and it could still be in a sideways market. If it drops down to 360, which is a bit of a drop, right? If it gets down to this area and it starts breaking this area, then we gotta relook at the bull case. But at the moment, it's not doing that, right? So we want to see what's going to happen around this 400 area. Is it going to just kind of bounce around here and remain around somewhere between, let's say, 400 to like 490. It's on being on the 200-day moving average is at 393 and some change. I could see it potentially just kind of wavering around. This is also what we might see a continuation of is which way? Now let's change it to 2 years. Low. Oh, Scott, sorry. High. Lower high. Lower high. Maybe lower high. This lower high right here would make a little more sense if it was like kind of down here to keep in the same sort of trend. So we do have that. We have the low kind of hit this low, and there's a lower low. But now we have a low, higher low, higher low. I think from here more strongly, low, higher low. We'll see. If it were to kind of stay in this range and go up from there, maybe this could be counted as another higher low. But let's see how that price action moves through this area. Now, if it kind of just wavers around there and doesn't really do too much, that's one thing. But if it starts dropping and it starts going back to this place, which this would be, we got a pivot point right here at the 390. So that wouldn't be a shocker if it were to pivot and start moving back up around the 390. We also see that prices kind of got clumpy here. What is that? That's roughly about somewhere in the, look, this area is like the mid, comes down here to kind of to the mid 390s. And then down here, we start getting our next really tight support or resistance would be around the 380. So let's watch and see how that goes through there, and how quickly does it take on the bull case? How quickly does it take to get back up here past 410? If it's or dealing with a 410, 408, 40. Whatever, just kind of gaining this area back, trying to knock on that 410 again. So yeah, at the moment, look at here, this sort of range of prices right here, but you see prices pivoted right here, prices up here, prices pivot right there, prices pivoted here, even down here, up here, right, and going back over here, kind of empty through there. But we got a lot of stuff here. So I wouldn't be surprised if it were to head down, even head down lower, or maybe pivot. What is that? What is that price around? Close 495. Excuse me, 395. Yeah, maybe around 395. Where was this pivot at right there? 396. How about here? 392. Here. 388. 385. 390. 389. So let's see let's watch and see what happens. Like for me, I am I've got I took assignment of 100 shares of a stock that I wanted to get assigned on. This is one I want to keep for long term. Pays good dividends. It's got great earnings. It's got great cash flows. It's got very low debt. It's a smaller cap company in an industry that I'm happy with. I think it's possible that over the next 5 to 10 years, this company is growing. I think possibly the market share will increase. So it's a company that I'm going to hold on to for a while. The only thing that at the moment I'm not really super happy about is selling calls on it. There's really not much demand on the call side, so all the shares that I have kind of just collecting dividends. But so I got that position from last Friday. I have 3 different other stocks that I have cash secured put options against, and I got some naked calls on one of the bigger tech stocks, and and then a lot of paper trades. But as far as real money trades, of course, then I got calls sold against my long stock positions and stuff like that. So if the market kind of keeps moving the way it's going to keep moving, I'm going to keep selling cash secured put options on stocks that I want to own for a while. There's another company that I'm slowly acquiring shares of. It's a bit out of my price range to buy 100 shares at one time, so I'm incrementally picking up 5 shares, 10 shares, 15 shares, whatever it might be. Just like when it's in a price range that I like, I'm slowly accumulating them, and then once I get to 100 shares, I'll start selling covered call options against that, and that's another company that I don't mind owning for 10 years, 20 years, and collecting dividends and selling call premium. Now, so that's probably what I'll do if the market kind of keeps dropping down. If it starts dropping down fast, then I'm gonna start doing directional trades with options or just straight shorting stock. But if it kind of keeps wavering in this back and forth, if it kind of keeps staying in this sort of like sideways trend, I will probably keep accumulating shares that I want to own, that type of thing. Another thing that I might do is some of those stocks that I want to acquire more shares of, I might sell a naked call, and then if the stock market starts rallying up and it's getting likely that I might have to make do on my assignment of the shares of stock, then I might buy the stock to cover the position, to turn that naked call into a covered call position. And again, this is on stocks that I wouldn't mind owning for several years. So if I don't end up getting called out, then it's okay, because I just picked up 100 more shares of a stock that I already own and I wanted more of, or I don't own any of it and I wanted. So I might do something like that. That takes a little more sophistication. Probably not something you want to start with. If you just want to start, check out my website, cash secured put options. I think hands down. Let's look at some of the different sectors. We're looking at one day. We see the technology dropped. We see healthcare is just still in this trend. Speaking of technology, so we're definitely not in this bull trend at the moment. It can reestablish a new bull trend. That would be fine and dandy, because we're down here. We have a pivot at 135, but this first pivot right here, pivoted here again. It just broke that area of 140. It could potentially do it at 135. We will see. Kind of waiting to see what happened. But this bull trend right here, this one is null and void. Definitely, it's kind of debatable here. The debate is over here. It's unless you want to really somehow try to get that. I like this tight one right here. It's probably over with this, but it was probably over right there. But it's definitely put the icing on the cake with that one. Healthcare is still kind of doing this downward trend thing, right? We had to try to break out up here, and then in 2 days, three candles go by. It's back to the bottom of the range. One candle goes up. It's trying to get to the top of the range. Today's candle opens up, and it's closing at the bottom end of the range again. And then the financials, look at this. It was like overhanging. It seemed like some snow overhanging on a ledge, and boom, just kind of dropping off. We'll see around this $35 area. If I remember in the past, for the financials, a $35 area tends to be support resistance. So let's see what happens. We're 65 cents away from it. And at the moment for the month, let's see what happens if we get down and start testing this 35.27. What happens around that 35.27, and then what happens around the 35. Industrials wasn't really like the snow hanging over the ledge as much, but we kind of going sideways and dropped here. This one, it was kind of slowly creeping down, and today we got this big drop right here. So we might see if past might give us an idea. Maybe we kind of Wouldn't be surprised if it does this and drop down again, or maybe it's just going to drop tomorrow. Let's see how that shakes out. Communications jumped up here and then hasn't been able to maintain it. And these are some big names for the market. So if that ETF keeps going down, that means that the way I'm finding this out, I'm just going to Yahoo Finance, put in whatever ETF you want to put in, look in this heading here for holdings, Apple, oh did I say, geez, Facebook, aka Meta, Google again, Netflix, Charter Communications, Comcast, T-Mobile, Walt Disney, AT&T, Verizon. So basically back to almost where we started, right? So it looks like our the $54 mark is some resistance, but that's not healthy for the bull. That's not a healthy bull movement there. Energy, on a 1 month we see, boom, we're in this downward trend on the 1 month. Tell you what, I love myself some energy sector stocks, so I'm hoping this baby crashes. I want to get some good deals on some stocks I've already been building positions in. I want to add to those. Consumer discretionary was trying to, look at this, high, lower high, was trying to break out, couldn't do it, tried to break out again or try to rally up again. Couldn't do it. Now we're closing below that 200-day moving average. It looks like price is pushing all the way down to the bottom. Consumer staples. Is it going to start doing a downward trend like this? It looks like it could. At the moment, though, we're kind of seeing the sideways type of action. Long-term trend is down. We're above that 200-day moving average. XLU for the utilities. Looks like wouldn't be surprised if we see some this type of action. Looks like it's trying to do that, but we do have this low, maybe a higher low. Kind of down on the month though. Real estate, we see, hey, it tried to break out. It tried to stay above it. Here again, just like it's like we saw. Where was it? Was it? I don't know. Totally. All right here. It's sort of the same. There's a lot of correlation, right, with the market. So try to rally up, but boom, it's below, and retail is dropping off. What do we got for what I would consider the general markets? Dollar moving its way up. TLT moving its way down. For a while, there's been this little bit of rumor throughout the stock market internet that the stock market tends to follow TLT. TLT's been moving down. We had some big drops down, so maybe there's some smoke to that fire. Or maybe there's fire to that smoke. Hey, whatever fancy words you want to put in there, go for it. No one ever said I was the greatest wordsmith. And then gold kind of continuing to move down. Oil, we're still in this range, 82 and 72. Bitcoin shot up here. Now it looks like some 24,000 might be becoming a new level of support, with 25,000 being a level of resistance. And the VIX spiked up today, pulled back a little bit, and we see our four major indices, right? See how everything was down, so it's no surprise. Look at the Dow Jones, really took a drop. Also with over here in the Russell 2000. But the NASDAQ also, and of course, a lot of people's favorite, Spider. Anything else that we can check? Let's just check the interest rates really quickly. Where'd they go? 10-year moving up. So here, the green line is the 10-year. This purple line is SPX. And generally speaking, when the interest rates have been going up, the stock market's been going down. It looks like that correlation is still happening. And we still have a pretty solid yield curve inversion where these longer dated bonds, treasuries, whatever they are still getting yielding lower rates than your shorter term stuff. And generally speaking, that has a bad economic forecast to it. One thing that is wise for your good buddy Brent to keep in mind is that the stock market and the economy aren't really attached to the hip anymore. There might be a little bit of overlay, but see this right here? That wasn't because of a strong economy. Right? That was some financial engineering. So if the powers that be go back to doing some synthetic fundamental bullishness, right there. At the moment, though, what I still continue to see, as I mentioned before, we got certain forces that are pushing the market up. We definitely got forces pushing the market down. And as long as these two forces are relatively even, we'll probably get a sideways market. But through certain times, we might notice, okay, at this point, the downward forces were more powerful. At this point, the upward forces were more powerful. Right, downward, upward. The other thing that I was starting to look at today, something. Ooh, boy. Where does that really? Where does it really go? Hard telling, right? As far as I know, trend lines are a bit subjective. So we got this bit of a wedge forming. All right, you can see this part pushing up here. Now, is it like this? And the reason why I'm bringing that up is over here on. Let's zoom out to zoom out. Right, where is it? Is it something like this? Is it kind of something like that? More of a flattening. Oops. So we would have, if that is what's happening, which I don't really know, I mean, there's debate. It's subjective. You draw on the trend line from here to here. You saw one on the candles. It looks a little different than it does on the line chart. Maybe like I don't know who the overall deciding person is, and that's what, as I've mentioned before, that's what this stuff is not something you necessarily need to prove in a court of law. You need to make money with it. So part of the art form of trading and investing is to come up with profitable decisions on incomplete information. So right now, because if let's see how prices go. If prices break this trend line right here, if prices break this trend line and start coming down to here, then it's kind of deviating from this upward trend. If it bounces sort of around in this area and then starts heading back up to the top, and then maybe we start seeing that it flatten out, because generally speaking, what tends to happen is that when, let's say you got more of a flat on one part and then it's kind of pushing up on the other part, it's almost like this. There's spring in here and it's kind of getting coiled tighter, but it's getting pushed from this direction, right? And because it's getting pushed from this direction, it's getting, the pressure is being built this way, and then sometimes it breaks this way. And just to be clear, I'm not saying that that is what is happening, because depending on which style of chart we're looking at, it's hey, can I move you? I guess maybe I can't. Thought I could drag this guy and move him around. I don't know. I'm seeing, when I look at this line chart, I'm seeing more here versus some sort of top. So, you know, it's a bit of subjectiveness to it. However, luckily for your good buddy Brent, you know, like, no matter what way it goes, I'm going to be in a pretty good position. That's what I recommend for you. Like, be in a good position no matter which direction it goes, right? One of the first things that I learned, like, in 2007, I went to my first options trading course, and I really didn't grasp much out of it, right? It was just too much over my head at that time. And then 2009, I kept learning, I kept studying. By 2009, I started going to these other seminars that would come through Honolulu, and then I had a little bit better of an idea. And in 2009, there was this one that was coming through here quite a bit. Maybe it was 2008. If I remember right, it's 2009, something like that. 2009, 2008. I think it was 2009, but I could be off. Invest Tools, right? And one thing that really stood out to me in Invest Tools, what they had taught is like, however you want to break it down, you can break it down. I'm just giving you just an example, right? This is not set in stone. But they had said something like, whatever your portfolio is, you know, take like 80% of your portfolio, do these high probability trades. High probability. Not Hewlett Packard, not High Point, high probability. And then with about you know, maybe like 10% of your funds, you're doing kind of like low probability but potentially high ROI. And you got another 10% left over. You can leave this extra 10% left over to hedge. You can figure out the math however you want to do the math, right? You want to do the 60% and then divide it somehow. You want to do like, you don't want to have any cash on the side. Don't put any cash on the side, whatever. You want to have 10% speculation, you know, really high risk speculation. And you want to have maybe 10% in something that's like medium speculation, whatever you want to do. But when you're doing the bulk of your account in this type of trading, it's very, very difficult to blow up, and you keep growing. And then when some of this stuff pops off, if you lose it, it's not a big deal because this is still growing. And if you make a big gain out of some of the stuff, it's nice because it really, you know, adds with this. So that's something that I've been able to implement fairly well. So in a way, like for me, it kind of doesn't matter which way the market goes. It'll matter to some degree for sure. And then, you know, I'm in a pretty good position where whichever direction it's going to go, I'll be able to figure out ways to make money with it. And that's what I'm recommending for you to try. Learn how to do this strategy first, to be your first high probability trade, selling cash secured put options on stocks you'd be happy to own. Check out iHaveSuccess.com. Freudian slipping all day. Aloha.